yeah, this report you wrote, I think it was from a few weeks ago. So obviously a lot has happened since then. How much more juice is there in this rally?
Yeah. I mean, from here, we will still have the multiple expansion and then we will have the earnings growth, right? Multiple expansion from currently MSCI China is trading around 11 times PE. It's up from the 12 at 8.3 in end of October. But even compared to the 15-year long-term average of 12 times, there's still 10% to go. And also, arguably, next 12, 18 months, we're looking at a cyclical upturn in China's GDP, corporate earnings, GDP growth, earnings growth are going to be stronger than the long-term trend line level. So arguably, that means the multiple could be higher than long-term average. So, I would say possibly 10, 20% for multiple expansion. And then you're looking at potentially 10, 15% earnings growth.
And on price, what would that be? How much upside on price?
So for the index level, it's probably accumulated together. We're looking at 20 to 30%.
Okay, this is MSCI China.
Yeah.
What's still missing, though? I'm just wondering, because it seems like the market has kind of looked past some of the reopening headlines now. Is there still something else that's needed to kind of make this rally a bit more sustainable?
Yeah, that actually has been a key question investors asking, what are people waiting for? What will convince the long onlys to return, to come back more, right? The questions have changed over the past few weeks, right? 4 weeks ago, when China first announced the 20 points relaxation, the question was like, can they really do it? Are they going to back off and go back to lockdown if the COVID cases surge? Then 2 weeks ago, it became clear that there was no going back. And people start to ask, how about vaccination? Are they going to approve the mRNA vaccine? And now, as more and more people are actually getting infected, right? Some say in Beijing, the infection rate is probably, something like 30 to 50%. And people stopped asking questions about vaccination. People stopped asking questions about the education narratives. But now the question is more about, when is the peak, right? Are we going to see those tragic images of overloaded ICUs and hospitals? And is that going to derail investor confidence and derail the rally? So I guess, one thing people watching for is the peak of the infection and the death numbers. With that behind us, I guess, consumer perspective, they will feel a bit more comfortable in terms of coming out to resume consumption activities, and investor would feel another box checked. Then beyond the COVID reopening, there are still more fundamental questions like property market, right? Which is still a big part of the economy. Even after economy reopen, when will the home buyer confidence improve? When will that help with the property-related sectors? So there are still a few boxes to be checked, but hopefully, in the next 3 months or so, we will see the peak of COVID cases. We might even see progress with Hong Kong reopening. We might see China reopening with rest of the world. Each of those milestones should help push the market higher and improve the investor confidence.
So if going into next year, if I had to buy one sector and sit on it, not look at it, and maybe look at it in 12 months, what would that be?
For now, the consensus topic is consumer.
Okay.
Right? Because as always, consumer is like the defensive beta. It has the cyclical upturn story, but it also has the long-term as China middle class grow, income grow, and also the premiumization of domestic brand. So that's probably the consensus consensus topic. But on the other side, investors also have concerns that, some of them already done very, very well, and earnings forecast already is very strong. So could it be a case of buy on hopes and actually sell on fact? That remains the question. But for now, people will pick consumer.
Tech, obviously, with the news about these ADRs, avoiding that sort of delisting risk, can I assume that overhang in the market is fading or at least gone?
Yeah, I think at least for the structural problem, PCOB already confirmed they are able to gain complete access that they demanded, right? Ongoing, they will still come back. They will still do those routine inspections. There might be bottom-up issues in certain, accounting practices. Yeah. But at least for the setup, China offered U.S. the complete access. So I do think that's a very important concern removed.
Short and mid-term strategy is part of this report, and I want to that's really a question of how much this rally can go longer term. I think there's no question it probably goes up much higher from here. What do I do in the next 3 months, and what do I then do in the 3 months after that?
Yeah, I think next 3 months is probably more about multiple expansion, right? And in this multiple expansion trade, when people's confidence on China come back, when long-only investors reduce their underweight on China, when hedge funds start to buy China, they probably will start with the large cap, high beta, liquid names, internet, EV, financial, like we spoke last time.
And that's mainly a Hong Kong story.
Offshore, ADR.
Okay.
Yeah.
Okay.
But beyond the 3 months, when we look at really earnings growth, are we really expecting very exciting earnings growth in those large cap stocks, right? Can those mega cap stocks offer much alpha? That's a big question, concern for many investors. So we find that many of the longer term investors, right, emerging market long only investors start to look deeper into the mid small cap names, right? Many of them in the Asia market, real economy names, right? Something like advanced manufacturing, industrial automation, also the green economy related basket, which has already been very outperforming a lot this year. So take a 3-year view, those fundamental real story names aligned to China's policy direction of import substitution, self-reliance, those will probably still be the better longer term stories.
You mentioned about consumer. I mean, that's a lot. I'm just wondering, it's really been led by what, travel, casinos.
Yes.
Are you trying to rotate to other sort of parts of the consumer sector now too?
Yeah, that's what investors are trying to do. So initially, the first batch were like, the hotels, restaurants, beer names, Macau gamings. Now people start to say, well, if Hong Kong is going to reopen with China soon, maybe the Hong Kong property names, right? Some of the Hong Kong stocks will benefit from tourists coming back to Hong Kong. And then within consumer, after the hotel, the services name, people start to look at like sportswear, right? After reopen, people want to be more health conscious and do more exercise. So the sportswear might have more room to catch up.
Yeah.
Yeah. Well, quickly, what to avoid? Very quickly. Anything?
We remain cautious on the property sector.
Okay.
Right?
Yeah.
So even though government made it very clear that they will keep them alive, all right, provide all the financing support for the short term, but we think the best for property sector it's gone behind us. So despite the very volatile share prices, we'll be cautious on the sector.